The economic landscape is a fascinating tapestry of forces weaving together, a delicate dance between growth, employment, and the ever-present specter of inflation. As March's employment figures unfold, we find ourselves at a crossroads, where resilient hiring meets moderating wage growth, painting a picture of cautious optimism. The heartbeat of the American economy lies in its robust labor market, and the latest data suggests a steady pulse. Payrolls in the world's largest economy are expected to have increased by at least 200,000 for the fourth consecutive month, a remarkable streak of job creation that underscores the nation's economic vitality. This consistent expansion of the workforce is a testament to the enduring demand for goods and services, fueling the economic engine with a steady supply of skilled labor. Yet, even as the employment landscape flourishes, a counterbalancing force emerges in the form of moderating wage growth. Average hourly earnings are projected to climb at a more restrained pace of 4.1% from a year ago, the smallest annual advance since mid-2021. This deceleration in wage increases is a welcome development in the battle against inflation, as it alleviates the risk of a wage price spiral that could reignite inflationary pressures. It is a delicate equilibrium, a tightrope walk where robust hiring sustains economic momentum while tempered wage growth helps to cool the embers of inflation. The Federal Reserve, ever vigilant in its pursuit of price stability, finds itself in a position where it can afford to hold off on reducing interest rates, awaiting further confirmation of inflation's retreat. Jerome Powell, the esteemed chair of the Federal Reserve, takes center stage this week, headlining a chorus of policymakers who will share their insights and perspectives on the economic landscape. From John Williams to Adriana Kugler, Mary Daly to Austin Goolsbee, Lori Logan to Thomas Barkin, a veritable brain trust of economic thought leaders will weigh in, offering their analyses and shaping the narrative of the nation's financial future. One of the key factors contributing to the moderation of wage pressures is the influx of labor supply. As more individuals enter or re-enter the workforce, the pool of available talent expands, alleviating the upward pressure on wages. This increased labor supply acts as a natural counterbalance, ensuring that wage growth remains in check and does not risk fueling a resurgence of inflationary pressures. The unemployment rate, a closely watched economic barometer, is expected to inch down to 3.8%, a slight decline from the two-year high reached in February. While this marginal dip may seem insignificant, it hints at a job market that is gradually losing some momentum, a subtle shift that could further aid in tempering wage growth and inflationary risks. Beyond the headline figures, additional economic indicators will shed light on the intricate workings of the labor market and broader economic landscape. The forthcoming job openings data for February will offer a glimpse into labor demand, with economists anticipating a decline, yet one that still leaves vacancies above pre-pandemic levels. Meanwhile, a pair of purchasing manager surveys from manufacturers and service providers will provide insights into the pulse of these crucial sectors, offering a holistic view of the economic rhythm. As we turn our gaze northward, Canada's economic data will be closely scrutinized. Surveys from the Bank of Canada will offer valuable insights into inflation expectations, a crucial metric that will inform the central bank's upcoming rate decision on April 10. Concurrent with the U.S. jobs report, Canada's employment figures will be released, painting a broader picture of the North American labor landscape. Additionally, trade data will shed light on the nation's economic ties with the rest of the world. Across the globe, a tapestry of economic indicators unfolds. Chinese purchasing manager surveys, scheduled for Sunday, will dominate the early part of the week, as policymakers, investors, and analysts seek to gauge the current strength of the world's second-largest economy. Activity in the factory sector is forecast to return to expansion for the first time since September, while growth in the services sector is expected to maintain a steady pace, offering a cautiously optimistic outlook for the Asian powerhouse. The Caixin manufacturing gauge, focused on the private sector, will provide a complementary perspective on manufacturing activity, adding depth and nuance to the economic narrative. Purchasing manager indices from economies throughout the Asia-Pacific region will offer a regional growth outlook, a mosaic of economic snapshots that will inform investment decisions and policy deliberations. The Bank of Japan's quarterly Tankan survey is expected to reflect a divergence in sentiment between industries. While the gauge for large manufacturers may slip for the first time in a year, the reading for large non-manufacturers could soar to a 32-year high. However, smaller firms are likely to express pessimism, a concerning development that could jeopardize the wage gains at small and medium-sized enterprises, SMEs, needed to power the virtuous cycle sought by the Bank of Japan. South Korea's export growth is forecast to cool in March, while consumer inflation data is anticipated to ease slightly, reflecting the global trend of moderating price pressures. Elsewhere in the region, price gains may accelerate moderately in Indonesia and the Philippines, while Thailand is expected to experience a slower decline in prices, offering a mixed picture of inflationary dynamics. The Reserve Bank of Australia will release minutes from its March meeting, shedding light on its policy deliberations. Additionally, 2 board members are scheduled to speak during the week, offering further insights into the central bank's thinking. The Reserve Bank of India, a pivotal institution overseeing one of the world's largest economies, is expected to keep its main policy rates steady on Friday, signaling a pause in its monetary tightening cycle. Across the Atlantic, the European economic landscape will come into sharper focus as additional pieces of the inflationary puzzle emerge. Following last week's consumer price reports from France, Italy, and Spain, and a region-wide holiday on Monday, further insights will be unveiled, revealing the strength, or weakness, of euro area price pressures. German inflation data on Tuesday is anticipated to show further weakening toward the 2% target set by the European Central Bank, ECB. The same day, the ECB will unveil its survey of consumer expectations, a crucial metric that will inform its policy deliberations. On Wednesday, the highly anticipated Eurozone inflation number will be published. Outcomes anticipated by economists, 2.5% overall and 3% for the underlying gauge that strips out volatile energy and food items, may prompt the ECB to inch closer toward cutting rates in the coming months as it assesses the impact of its policy on constricting growth. Governing Council members have until the end of the day on Wednesday to share their views before a blackout period commences, leading up to their April 11 decision. Further clues about their thinking may emerge the following day, when an account of their last meeting is published, offering a window into the central bank's policy deliberations. On Thursday, Sweden's Riksbank will release minutes of its March decision, shedding light on an outcome that saw officials firm up plans to cut rates at some point in the second quarter, reflecting the broader trend of monetary policy normalization across Europe. Switzerland will release inflation numbers on Thursday as well. While an acceleration is expected, if the figure comes in as forecast at 1.4%, it would still be well below the ceiling targeted by the Swiss National Bank, which recently cut rates in response to moderating price pressures. And in Turkey, where the central bank has been aggressively tightening its monetary policy, data on Wednesday may show another acceleration in consumer price growth toward a staggering 70%, highlighting the nation's struggle to rein in inflationary forces. Several monetary meetings will also take place this week across Europe and Africa, underscoring the global nature of the economic challenges and policy responses. In Sierra Leone, where inflation remains stubbornly above 40%, officials might be persuaded to raise borrowing costs again on Tuesday in an effort to curb price pressures. The same day, Lesotho, which pegs its currency to the South African rand, may follow its neighbor and hold the key rate at 7.75% to support its economy. In East Africa, Kenya's monetary authority is set to leave its benchmark rate on hold on Wednesday after a currency rally helped temper prices, reflecting the intricate interplay between exchange rates and inflationary dynamics. Further east, Mauritian officials may hike borrowing costs after inflation hit an 8-month high amid recent heavy rains from tropical cyclones, underscoring the impact of environmental factors on economic stability. Back in Europe, Poland's central bank is poised to keep its benchmark rate at 5.75% on Thursday, amid a standoff with the government, highlighting the political complexities that often shape economic policymaking. Romania's central bank may consider the timing for its first rate cut after inflation started to ebb, signaling a potential shift in monetary policy stance. Moving westward, the economic landscape in the Americas offers its own set of challenges and opportunities. Chile on Monday posts its February GDP proxy data, which is likely to cement the view that the nation's economy is on the rebound after a period of weakness. This positive economic momentum sets the stage for the Chilean central bank's monetary policy decision on Tuesday, where it is all but certain to trim borrowing costs for a sixth straight meeting. The early consensus among economists forecasts a 75 basis point cut to 6.5%, representing a continued easing of monetary conditions to support growth. However, an uptick in consumer prices and a wobble in inflation expectations may persuade policymakers to opt for a more modest reduction, underscoring the delicate balance between fostering economic expansion and maintaining price stability. In Brazil, a raft of data releases, including monthly trade figures, industrial production, current account statistics, foreign direct investment flows, and primary and nominal budget figures, will offer a comprehensive snapshot of the nation's economic vitality. These varied indicators will inform policy decisions and shape investor sentiment as Brazil navigates the intricate web of global economic forces. Mexico's economic narrative will be enriched by the release of the minutes from Banxico's March 21 decision, when it cut the key rate to 11%. While the post-meeting communiqué tilted hawkish, the minutes may push that vibe up a notch or two, offering nuanced insights into the central bank's policy deliberations and its assessment of prevailing economic conditions. Peru's inflation data on Monday may reveal a critical milestone, with the annual print potentially falling below 3%. Such an outcome could persuade the central bank's president, Julio Velarde, and his colleagues to resume cutting borrowing costs at their April 11 meeting, further easing monetary conditions to support economic growth. Colombia's central bank, too, will shed light on its policy stance by publishing the minutes of its March 22 decision, when it doubled the pace of easing and lowered its rate to 12.25%. With March consumer price data on Friday expected to show a 12th straight month of disinflation, the odds are stacked in favor of another half-point move at the central bank's April meeting, signaling a sustained commitment to taming inflationary pressures. As we navigate this intricate tapestry of global economic forces, one thing becomes increasingly clear: the pursuit of economic stability and growth is a delicate balancing act, a choreography of monetary policy, fiscal measures, and a keen understanding of the interplay between employment, wages, and inflation. From the bustling financial centers of New York and London to the emerging markets of Asia and Latin America, policymakers and economic observers alike are tasked with deciphering the intricate signals emanating from a multitude of data points, each one a thread in the larger tapestry of the global economy. It is a symphony of numbers, trends, and projections, and those who can skillfully interpret this complex score will be best positioned to navigate the ever-shifting economic landscape. For it is in the synthesis of these disparate elements that true economic insight emerges, guiding nations, businesses, and individuals toward a path of sustained prosperity. In this intricate dance, the choreographers are the central bankers, finance ministers, and economic policymakers, their every step calibrated to the rhythm of employment figures, inflation data, and growth projections. It is a performance that captivates audiences worldwide, for the stakes are high, the well-being of nations and the livelihoods of millions hang in the balance. As we observe this unfolding economic drama, we are reminded that behind every statistic, every data point, lies a human story, the dreams and aspirations of entrepreneurs, the hopes of workers seeking stable employment, the desires of families striving for a better life. It is this human element that imbues the dispassionate language of economics with profound meaning and urgency. For in the end, the true measure of economic success is not merely the oscillations of stock markets or the fluctuations of currencies, but rather the tangible impact on the lives of ordinary people. It is in the creation of jobs, the expansion of opportunities, and the alleviation of poverty that the true power of economic policymaking resides. So as we pore over the latest figures and analyze the implications of central bank decisions, let us not lose sight of the human dimension that lies at the heart of this intricate endeavor. For it is in the pursuit of economic prosperity that we ultimately seek to uplift the human condition, to create a world where opportunity knows no boundaries, and where the fruits of progress are shared by all.